Hey everyone, and welcome. It is Monday, September 29th, 2025, and today we're breaking down a really fascinating day on Wall Street. We saw this incredible optimism for the future, especially in tech, just slam right into some major political anxiety happening right now. Let's get into it.
So the big story today is this classic tug of war. I mean, on the surface, you look at the numbers, and the market closed in the green. But that positive finish is hiding a pretty serious conflict underneath. You've got this powerful, surging optimism in the tech sector around AI, and it's clashing head-on with this growing worry about a potential U.S. government shutdown.
So here's kind of how the day played out. The market opened really strong, right? It was pushed way up by a big rebound in tech stocks. But as the day went on, you could feel that momentum just start to fizzle out as those shutdown fears got more intense, especially after talks between the White House and Congress completely stalled. Still, even with those late-day jitters, all three major indices managed to hang on to their gains and close in positive territory.
All right, so what was really going on under the hood here? What was causing this push and pull? Let's break down the conflicting forces that really defined today's trading.
You can really see the day's battle right here. In the green corner, we had a major rebound in how everyone's feeling about AI, helped along by a positive note from Goldman Sachs. Plus, some pretty dovish comments from the Fed's John Williams got hopes up for rate cuts. But in the red corner, that threat of a government shutdown was, by far, the biggest negative force, along with a sharp drop in oil and some renewed tariff threats from former President Trump.
And this is the number that really spooked the market. Late in the day, the probability of a shutdown just spiked to 84% after negotiations completely fell apart. It is the single biggest cloud of uncertainty hanging over everything, and it's making it really hard for investors to commit one way or the other.
So how did all this drama actually shake out across the different parts of the market? Let's take a look at which sectors won, which ones lost, and what happened with other important assets like gold and oil.
Yeah, no big surprises here, given what we've been talking about. The technology sector was the clear leader, just riding that big wave of fresh optimism around artificial intelligence. And on the complete other end of the spectrum, the energy sector was the biggest loser by a long shot, dropping almost 2%, and that was a direct result of oil prices just tanking on news of a potential ceasefire plan between Israel and Hamas.
Well, the political drama in Washington basically sent investors running for cover. We saw a classic flight to safety. Gold surged to a brand new record high. Investors were buying up U.S. government bonds, which pushes their yields down. And at the same time, oil prices plunged, not just on those peace talks, but also on reports of potential supply increases from OPEC+.
Okay, now for one of my favorite parts. Let's zoom in on 5 specific companies that made some of the biggest moves in the biggest headlines today.
First up, we've got the video game giant Electronic Arts. The stock jumped today on some massive news. It's being taken private in a colossal $55 billion deal. This kind of huge M&A activity is a sign that even with all the market jitters, big investors still see value out there and are willing to make some enormous bets.
Next, here's a fantastic example of that whole AI theme in action. The e-commerce platforms Etsy and Shopify, well, their stocks just exploded higher today. So, why? They announced a partnership with OpenAI. The idea is that soon you'll be able to buy products directly from inside a ChatGPT conversation. The market absolutely loved this idea. What an innovative integration.
Of course, we have to talk about NVIDIA. It's the leader of the whole AI pack. It was a huge driver of the tech rebound today, climbing over 2%. And its strength wasn't just based on good feelings, it was reinforced by something real, an announcement of new robotics technology that it co-developed with Google's DeepMind.
Okay, now for a wild one. The cannabis company Tilray skyrocketed an unbelievable 60% today. And the reason for it was, well, highly unusual. Former President Trump posted a video on social media talking about the benefits of cannabis for senior citizens. And that post just sent Tilray and a bunch of other related stocks into an absolute frenzy.
And finally, the chipmaker Micron gained over 4%. Now, this one wasn't about flashy AI news. It was really more about a growing optimism that we're seeing a recovery in the memory chip market. Forecasts are pointing to higher prices for DRAM chips in the fourth quarter, and that's a really positive sign for the whole semiconductor industry.
So, okay, with all these conflicting signals, AI is great, politics are a mess, how could you possibly approach this market? Let's walk through 3 different strategies, each one for a different appetite for risk.
All right, we can frame this in 3 ways. First, there's the aggressive growth path, which is all about leaning into that tech and AI story.
Then there's the neutral and hedged path, which tries to balance out all the risks. And finally, the conservative value path, for those of you who just want to avoid all the drama altogether.
First up, the aggressive play. The core idea here is simple. You believe the government shutdown is just short-term political noise. The real, long-term story is the AI revolution. So you'd see any market dips caused by the shutdown as a fantastic buying opportunity. NVIDIA is the classic example here, but the big risk is obvious. Valuations are sky high, and any little disappointment in earnings could cause a really painful correction. Okay, next is the neutral hedged approach. This is for someone who thinks, hey, that shutdown risk is real and I want to protect my portfolio. You could use an asset like a gold ETF to hedge against all that political uncertainty. The idea is that if the shutdown chaos gets worse, gold should do well. Then, if and when the situation gets resolved, you can take those profits and rotate them back into stocks. The risk? Well, if a deal gets reached really quickly, gold prices could fall fast and your hedge doesn't work out.
And finally, the conservative path. This strategy basically says, you know what, I don't like the sky-high tech valuations, and I don't want to play games with political headlines. Instead, you'd focus on stable, maybe even boring, undervalued companies. An example might be Brown-Forman, the spirits company, which is trading near a 10-year low valuation. The risk here is what we call a value trap, meaning the stock is cheap for a reason and it might just stay cheap, completely missing out if the AI rally just keeps on roaring.
So, after weighing all those strategies, what's the big picture takeaway here? Let's try to boil it all down to a final verdict and the most important risks you need to be watching.
It really does boil down to these two opposing views. The bulls, the optimists, they believe the market's foundation is strong. They see AI as this powerful growth engine, they think the Fed is turning friendly, and they see the shutdown as just temporary noise, a buying opportunity. The bears, on the other hand, see the shutdown as a very serious threat that could delay crucial economic data, throw the Fed's plans into chaos, and really hurt the real economy if it drags on too long.
So, going forward, here are the two critical risks to keep on your radar. First, the duration of this government shutdown. Look, a few days is one thing. The market can handle that. But a few weeks, that could seriously damage confidence and even impact the U.S. credit rating. Second, AI stock valuations. The hype is just enormous, and these stocks are priced for absolute perfection. There is simply no room for error when they report their earnings. And that leaves us with a central question of the moment, the one that perfectly captures this market's dilemma. In a direct showdown between political chaos and incredible technological momentum, which force is actually going to win out? That is what we are all going to be watching. Thanks so much for joining this explainer.